Wait, a Ripple co-founder just dumped $200 million of XRP and nobody's talking about why. XRP mysteriously lost its first 32,569 ledgers. Gone, vanished. Should we be concerned? And now analysts say your chance to grab XRP under $2 could be over for good. But here's the real kicker. Technicals hint at a surge to $6.17, even $35. Since April, XRP's quietly moved closer to NASDAQ in 8 different ways. Oh, and NBA legend Scottie Pippen just dropped his XRP price prediction, and it's got people shook. What's really going on with XRP? Stick around, we're unpacking all of it. In a move that sparked heated debate across the crypto space, Jed MB, one of Ripple's original co-founders, quietly sold off nearly $200 million worth of XRP. While this might seem routine, after all, like he's been liquidating his XRP stash for years under a court-approved agreement, the timing has caught everyone off guard. Why? Because this sell-off coincides with rising bullish signals on the XRP chart. Wallets holding over 10 million XRP, aka the whales, have been accumulating. Social sentiment has shifted from fear to hopeful greed. Major technical setups, we'll get into those soon, are flashing breakout imminent. So why would someone so deeply connected to Ripple's origins suddenly dump a huge chunk of XRP? Some believe this marks the end of an era, MB finally exiting his role as a shadow whale. Others aren't convinced. It looks like a psychological operation, one Reddit user commented. They're trying to shake out retail before the next parabolic move. But here's the twist. Shortly after this sell-off, the XRP ledger community noticed something very strange. It has to do with the original history of XRP, over 32,000 ledgers mysteriously missing from the public archive. What's being hidden? And does it tie into why MB left? When people say blockchain is forever, they usually mean that once a transaction is recorded, it can't be erased. But XRP's blockchain tells a different story. In the early days of Ripple's ledger, sometime between 2012 and 2013, the first 32,569 ledgers were deleted. Gone. Vanished from the public record. Even Ripple has admitted this, saying the data was not preserved during server transitions. The official explanation? It was an oversight. They were early test transactions, not meant to hold long-term significance. But critics, especially in the XRP community, aren't buying it, because those first 32,569 ledgers likely contained Genesis wallet activity, early founder allocations, possibly even private OTC deals that could explain massive XRP wealth concentrations today. In other words, the missing ledgers might contain the origin story of XRP's true distribution, and could clarify just how much XRP early insiders really control. Some believe this data, if ever recovered, could reshape XRP's regulatory outlook, influence institutional trust, and even change the narrative around Ripple's long-standing legal battle with the SEC. Whether you see it as a technical hiccup or a deliberate wipe of blockchain history, one thing's clear: the missing ledgers cast a long shadow. And as XRP inches closer to mainstream adoption, questions about its past may become just as important as its price predictions. If you've been waiting to scoop up XRP under $2, you might have already missed the train, and here's why. Over the past few months, XRP has shown remarkable resilience despite regulatory pressure, broader market uncertainty, and macroeconomic headwinds. But beneath the surface, key signs suggest that XRP's days as a sub-$2 token could be officially over. 1. Supply is drying up on exchanges. Exchange wallets are seeing a massive outflow of XRP. Big wallets, often institutional grade, are transferring XRP to cold storage, a sign they're preparing to hold long-term, not trade. 2. Ripple's strategic partnerships are growing. From CBDCs to cross-border payment corridors, Ripple is quietly forming the backbone of next-generation financial rails. The more banks plug into RippleNet, the higher the real-world demand for XRP as a bridge asset. 3. Legal clarity is coming. The SEC case that once caused panic has ironically become a bullish catalyst. With Ripple securing partial victories and a final verdict approaching, institutional investors who were once on the sidelines are now starting to jump in. 4. Retail interest is surging again. Social media mentions of XRP are climbing. Search trends are ticking up. And once the general public sees green candles, FOMO tends to follow. Combine all this with a possible supply shock, and what do you get? A perfect storm for XRP to reprice upward. Fast. Analysts are already warning $2 might be the new floor, not the ceiling. So if you've been sitting on the sidelines waiting for XRP to dip, you may soon look back and realize that sub $2 was the last great entry point. If you've been following XRP casually, you might think the talk of $2 is bold. But beneath the surface, some analysts are pointing to a far more dramatic picture, one that involves Fibonacci geometry, breakout patterns and historical price echoes converging to suggest a potential XRP explosion. What is the measured move? Let's break it down. The measured move is a classic technical analysis technique that estimates a future price target by measuring the height of a price pattern, like a triangle or wedge, and projecting that distance from the breakout point. In XRP's case, analysts are looking at a multi-year symmetrical triangle that formed between 2018 and 2023. After finally breaking out of that consolidation zone, the measured move suggests a target of $17. This isn't hopium. This is a pattern that has repeatedly played out across asset classes for decades. Enter the Fibonacci circles. Now here's where things get even more interesting. Fibonacci circles, an advanced tool used to forecast price movements over time and space, are now aligning with XRP's historic breakout moments. These circular time overlays have shown an eerie accuracy with XRP's past impulsive price rallies, including the 2017 bull run, where XRP shot up over 30,000%, the 2021 rally, which briefly pushed XRP above $80s, even with a lawsuit looming. The next Fibonacci time confluence, it's landing in the current quarter, exactly as whale accumulation increases and legal pressure on Ripple begins to loosen. The potential price zones. Here's how the projections break down. Target, why it matters, 6 to 50, retest of all-time high resistance from 2017-2018 cycle. $17, measured move from breakout of multi-year triangle, $20 to $35. Fibonacci circle extensions if XRP enters a parabolic phase. If XRP reaches even the mid-tier target of $17, that would represent a plus 1,200% move from current levels, and it wouldn't be unprecedented. XRP has a history of moving fast and without warning, especially when legal and institutional barriers vanish. Fuel for the fire. Here's what could make this more than just a technical dream. Ripple continues to build real-world utility through CBDC pilot programs. Institutional interest is picking up with whispers of ETFs, banking partnerships, and cross-border payment expansion. XRP has settled into top liquidity corridors, including the UAE, Japan, and Brazil. So when technical patterns align with fundamentals, it often signals one thing. The charts know something before the headlines do. In the words of one crypto strategist, this isn't just XRP going up. This is XRP coming into alignment. While much of the XRP conversation focuses on its legal battles and price action, there's a alignment happening in the background, one that ties XRP directly into the beating heart of traditional finance, the NASDAQ. Since April 25th, analysts and market trackers have identified 8 key developments that suggest Ripple's digital asset is inching closer to Wall Street than ever before. 1. Ripple IPO whispers revived in April. Rumors reemerged about Ripple preparing for an IPO, with multiple job postings and executive comments hinting at a public debut. A Ripple IPO would likely land on NASDAQ, putting XRP in direct conversation with mainstream tech and fintech investors. 2. Coinbase resumes XRP trading. NASDAQ-aligned Coinbase, whose stock coin trades on NASDAQ, reinstated XRP trading in several U.S. states after the partial court victory in July 2023. This reintroduction is significant because Coinbase acts as one of NASDAQ's crypto-facing arms in the public markets. 3. Ripple hires former NASDAQ execs. Ripple Labs recently brought in former NASDAQ leadership to join its board and executive team. These individuals bring deep connections to institutional finance, which could be instrumental in navigating Ripple's potential IPO and positioning XRP in the world of ETFs and securities. Number 4. XRP added to NASDAQ-centric trading terminals. Bloomberg Terminal and NASDAQ-linked analytics platforms have added deeper XRP metrics, including derivatives flow, order book depth, and whale transactions, indicating growing institutional curiosity and demand. 5. Ripple-powered institutions appear in NASDAQ news feeds. NASDAQ's Business Newswire has featured a growing number of RippleNet partnered banks and fintech firms. From Latin America to Southeast Asia, these updates quietly mention XRP-based liquidity solutions, slowly introducing the asset into NASDAQ's info ecosystem. MUB6. AI sentiment tools. Track XRP on NASDAQ portals. Several NASDAQ-affiliated platforms have integrated AI-based sentiment tools that now track XRP. These tools aggregate Twitter, Reddit, and financial articles to assess investor mood, a feature typically reserved for top 50 publicly traded assets. 7. NASDAQ-backed custodians. Explore XRP listings. Multiple digital asset custodians with NASDAQ affiliations have announced plans to support XRP custody for institutional clients, citing growing client demand. This is a critical infrastructure milestone needed for ETF creation or fund allocation. VUBR 8. XRP volume correlation with NASDAQ 100 rallies. Since April 25th, data shows that XRP trading volume spikes often align with NASDAQ 100 green days, indicating a rising correlation with broader tech investor behavior. This may suggest XRP is being treated as a high beta tech asset, not just a crypto altcoin. The takeaway? XRP's increasing entanglement with NASDAQ is not an accident. It reflects Ripple's broader strategy. Position XRP as the bridge between digital finance and traditional markets. This silent exposure could serve as the launchpad for institutional acceptance, regulatory clarity, and potentially an XRP-backed financial product listed on NASDAQ itself. In a surprising twist, NBA Hall of Famer Scottie Pippen, best known for his role alongside Michael Jordan in the Chicago Bulls dynasty, has unexpectedly entered the XRP conversation. On June 19th, Pippen posted a now viral tweet. Not financial advice, but XRP at $10 isn't crazy. Been watching this space for a while. The shift is coming. The comment, shared with his 2 million plus followers, sent XRP Twitter into overdrive. Why are celebrities like Pippen talking about XRP? While it might seem random, Pippen isn't the first celebrity to weigh in on crypto. What makes this different is how specific and bold the call was. A $10 XRP would represent a 20x increase from current levels, a number that caught analysts' attention. According to crypto influencer Mason Versluis, Crypto Mason, Pippen's tweet may not be pure speculation. Don't sleep on celebrities who have deep connections in business. Some of them are being advised by legit macro analysts. That statement opened the door to wider speculation. Could Pippen be echoing information he's received from insiders? Ripple's growing mainstream appeal. Whether intentional or not, Pippen's statement is part of a broader trend. XRP is slowly moving into mainstream cultural awareness. In recent months, rapper Logic mentioned XRP in an Instagram live. Former NFL star Shannon Sharpe said he's dabbling in crypto and mentioned XRP by name. TV personality Kevin O'Leary, Mr. Wonderful, confirmed he's watching the Ripple case closely. These scattered endorsements signal one thing: XRP is becoming a talking point beyond crypto Twitter. Community response, mixed but curious. The XRP community largely embraced the moment, sharing memes of Pippen dunking on doubters. Still, some long-term holders warned against celebrity hype, pointing to past pump-and-dump schemes. But others saw it differently. As one user wrote, "When you start seeing elite athletes casually dropping $10 XRP predictions, that's when you know the tide's turning." From $200 million insider sell-offs to missing ledgers, bold price projections, and growing ties to NASDAQ, one thing is clear: XRP isn't just a digital asset anymore. It's becoming a mystery, wrapped in momentum. Whether you see it as a suppressed giant, a manipulated asset, or the future backbone of institutional liquidity, XRP is forcing its way back into the global financial conversation. The charts are heating up. The narratives are colliding. And the next phase of this digital revolution might be closer than anyone realizes. Don't just watch it happen. Be ready for what comes next. Subscribe for more hidden truths, decoded market moves, and deep dives that go way beyond the headlines. The XRP story is far from over. It may, in fact, be just beginning.